All right, round table. Well, I just realized we did not have Trading Tuesdays or Thursdays last week. I don't know what happened. I thought I posted the videos and did not. Again, yesterday, thought I posted the video. I did not. So let me go over essentially a week and a half worth of trade follow-ups. If you remember last week, we were tracking a couple of different currency pairs, starting with the euro. We were also watching the Aussie yen, the pound, the Canadian dollar. We took a look at the S&P 500 gold and then the Australian dollar. In the roundtable coaching sessions, we've been dealing with the reality of what it takes to follow multiple symbols. At the same time, we've been talking about what it really takes to make money trading. Now, what I'm about to say is not popular, and it goes against what you usually hear in the marketplace. Unfortunately, what you see out there in the marketplace is really pretty self-serving. Most of the guys are making, like me, they have some sort of product offering, so obviously, we want to make money. But there's a trade-off there. The trade-off is what most traders hope,
it's 10 o'clock,
dream, wish for, is that there really is a way to take a small amount of money, $2,000, $5,000, $10,000, and grow that into a really big chunk of money, like $500,000 or even several $1,000,000. I mean, that really is the dream. And I liken that to a kid that's in high school or even college who's hoping to make the pros. The reality is there are only so many slots on professional teams, and that means you've got to be really good. And the reality is trading is not much different. If you want to make $500,000 in the marketplace, and really it doesn't matter if you're starting with a couple thousand or 5,000 or whatever. Because it's not the amount of money that's the issue. What I mean by that is you can look around and find billion-dollar hedge funds that go out of business. So their $1 billion wasn't enough to keep them from going out of business, right? It doesn't matter how much you have. Anybody can lose it all in the market. When it comes to making it, though, there are certain things that you've just got to realize about the market. There's no way to predict the market. We spent the last couple of weeks in the coaching sessions going over that. And I know, some guys, they hear that and they immediately tune me out because they just simply believe that there is a way to predict the market. And so here's this guy, Max, saying there isn't a way. And, they're like, you know what? I know that there is. Okay. If you just tune me out, fine. For everybody who's left, the good news is we don't need to predict the market. We can use the way the market actually works, the way the market behaves, the laws, the irrefutable universal laws of the market. We can use them to our advantage, just like we use the irrefutable laws of the world we live in to fly an airplane or to drive a car or, to talk on a cell phone. 100 years ago, all that stuff was, not even thought about. It would be like magic. Anyway, how does all that relate to trading multiple symbols? There's no problem with tracking multiple symbols. In fact, what we've been talking about in the coaching session is that the purpose of tracking multiple symbols, like the euro here, the Aussie yen, the pound, etc., is so that we can be more selective, we can be more choosy, we can take fewer trades per symbol, but then track multiple symbols so that we still have legitimate opportunity. And there is a difference between legitimate opportunity and then, the crap trades that we usually take. So I said all that as both as a way of disclaimer, but then also as a build-up to the punchline, which is if you have less than 100,000 in your account, or you've been trading less than 2 to 3 years, you've got no business putting multiple positions on in your account. It's simply too risky, the possibility of making money is so small, and weighed against the possibility of losing money, it's just not worth it. There's no reason why you've got to have more than one trade on at a time. So let's get into it. We'll take a look at the euro first. We've got a bunch of different trend lines. All the stuff back here in the past was put on by way of tracking and orienting ourselves to the market. Then we have these two trend lines up here giving us guides in the marketplace. So if the euro is going to stay below these trend lines here, it's just going to be in a downtrend. We saw yesterday's trading break over one of those trend lines. Whoops, that didn't quite go far enough. Oh, yes, it did. Right there. So at this point, I am waiting for a retest of that line. We can also see that the euro broke into this sort of general resistance area here. So you can see price is starting to climb out. It's not quite out of the woods yet. I would actually be much happier taking trades if the market, or I should say, when the market, if the market breaks above these two highs over here. And we've talked about this for several weeks. Most retail traders, when they see 2450 and then they hear somebody like me say you want to wait until the market gets over 2600, oh Mac, I'm missing out on all this opportunity. Well, I would submit to you that as a professional trader, I would say that if a retail trader trying to get in and trade in that area, you're going up against some of the best guys in the world, and they're going to chew you up and spit you out. So more power to you if you want to try and chase after that business. I'd rather take the easier trades. Aussie yen. Now, this is one of those currency pairs that we've been tracking for a while. We've taken multiple trades in it. All of the trades that we took were as the market was breaking up and through this prior resistance zone. And you can see that this market is still kind of trading around that area. So we're not really getting much in the way of the market moving to the upside, but then of course we're not getting it moving to the downside either. What that means is we've got a balance between the buyers and the sellers. Don't believe the BS about the market's confused or the market's congested. Look, the market doesn't get a cold. When you are looking at the chart, you are visually seeing the commitments of traders around the world. So at this point, really the best trades are going to be taking longs above resistance here, which is above 83.5, or taking a break below 82. Which means you're coming in about midway through that resistance, the prior resistance zone. Trades below 82, of course, are a little bit aggressive, and that means you're expecting the market to come back down into this area here, which is about 80 bucks. All right, following along with the pound, you can see uptrend here, at least on the short term. Remember, with the hourly charts, we had some action back here on the 13th that we've been following. Here's the breakout on the 15th, meaning the breakout from this prior area of selling. This is the retest from the 17th through the 20th, so Friday all the way through Monday, and now the trend continues. Trying to jump on this at this late stage in the game is a bad idea. Do not get sucked into this thing, because that's what the professionals want you to do. They want to make the market look great. Professionals know that retail rookie traders only buy when they see the market going up. The only areas that there are to buy on this chart right now is around 57.65, which is support over here, or you've got to wait until this market gets back down to 56.75, or you've got to wait for a break above 58.10, and then a retest. In fact, I'm not really all that interested in shorting up here at 57.65 because I've got to stop out at almost 5,800. That's just way too much risk. So at this stage of the game, it's too late to get on along. The short setup isn't really the greatest, so we've just got to wait for something to happen on the pound. So the Canadian dollar, we're also looking at an hourly chart. Lots of sideways action here, which means you've got buyers and sellers on both sides of the market. You can see back around the 14th, the breakdown. So you had the move down, sideways, down, and now you've got the market coming off of a very short bottoming pattern. Remember, bottoming patterns invariably look this way. Sideways, move up, sideways, one last plunge down, and then a very fast move up. This is with some buyers, they use this strategy specifically to, number one, flush out anybody who bought over here to get them to sell so that they can buy. Then they push the market up very quickly because the people who bought back here between 98.78 and 98.13, quite frankly, they're just scared. So at this point, if you're going to buy, you've got to wait for the market to come back down to 99.08, or you've got to wait for a convincing close above the 99.38, 99.30 level, and then a retest of that level. We'll go ahead and just jump on, into gold because I'm going on 11 minutes. Don't want to keep you here all afternoon. Gold, again, we've got all of these trend lines on the chart by way of orienting ourselves to the market. What we came up with eventually was, this was both last week and, well, actually I think it just was last week, a long strategy here on gold. You see that has paid off handsomely. This is the gold index, though. It's not it's not the futures contract. But you can see gold now running right into the area of last sellers. So gold, unless it can get above the 170 level, along with the retest, there's no reason, again, to try and jump into gold here. If you haven't bought, simply too late. The best place, I would love to see gold back down around 145, 140, which, because gold is such a big market with a lot of commercials, it just might get back here in this kind of high-level bottoming process. And I know it's going to be almost irresistible to try and short up here. The only way I'm going to short in this area is if I get a double top, and I'll take an aggressive trade on the second top, or if I get a double top, I will wait for confirmation, just like we had back here. Go ahead. Well, let me just jump into the Aussie. I'm trying to go fast because I'm already at 12 minutes. Come on, ice cream. There we go. Aussie, I love this setup. You can see right here is prior support. Buyers came in on the 16th, 17th, on the 17th, Friday. Here's the beginning of the week, right back into resistance and now back down. This move down here is something I would love to jump in on. However, I want to see price get a little bit closer to 416 before pulling the trigger, only because we've got the opening of the week, and that's probably where the buyers are going to go. However, if I do get a solid close above 452 and a retest, I'm also going long above that level as well. If, on the other hand, I get a breakdown below support here and then a retest back into then this prior support area, so break below 416 and a retest, then I'm looking for my short in that area.